Investors. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Wednesday, the 30th of October. The Dow's up 150 at 42,383. I just want to go through a couple of things in the Dow that I was talking about and when I was interviewed by Jacob yesterday. One is that, maybe I should go over here. Yeah. One is that the Dow, with the black background, you see the green 9-period moving average? That's when the 9 is over the 14, and when the 9 is under the 14-period moving average, it turns to pink. Well, we got that recently. You see all these coincidental moving average convergence, divergence, call them the MACD, reversals to the downside coincide with many of the peaks, and we just got that recently. But most importantly, look at the slow stochastic. Every time you got to this resistance area, around about 95% or just under, there was a reversal. But look what's happening. Look how quickly the prices moved down, and now you're getting to the part where it could, in fact, reverse to the upside. So with that said, number one is, let me get out of that. I want to go here. I want to go to this one here. Number one is that the Dow, because of the makeup of the Dow, has had a number of stocks that are in the Dow and that have just been clobbered. And the upside has been limited over the last couple of days. And even a stock like a Microsoft, which has been doing very well lately, has been negated by some of the stocks that have, like Caterpillar today. Caterpillar, where is it? Caterpillar is down 8 at 379.37. Not a big deal, but it is down. It made a 403.60 high back in early October, and here it is with a low today in the 367 area. So now what's really important is I want to go to, back again. And I wanted to just show you this. So a technique that I've used for a long time has been quite successful, but this time I didn't do anything with it other than to mention it. One of the reasons is I have a left side, right side price time match in the Dow that goes from the March high, comes all the way down, then goes to a higher high in July. That measured move takes me to 11.11.24. That's the 11th of November. I have no idea whether it's going to work or not. But what I also do is within this particular yellow background chart, I have something I call the Chapman Wave Dark News Index, DNI. So every time I put this in, it was usually for years and years, decades actually, it's invariably the high interest rates, or it's interest rates themselves that are worrying the market, the fact that the rates could go higher, and I put that in, and you get the sharp pullback. And I made this like a white rectangle, and I put in DNI, Dark News Index, and then I put the date where it started, not necessarily the high or the low, just where that technical indicator came in. I did it recently back in September. I said, I don't know if there's going to be much of a pullback, but I use a technique called the internal high and the residual high, the internal low and the residual low. And it's worked out very nicely because we've got almost all the lows almost exactly to trade the both long positions and trading positions. But look at this. I had this internal high and residual high starting around about the 17th of, actually it was the 15th. I don't know why I put 17th there. It was the 15th of October. And I said we could be pulling back. Well, look what happened. We pulled back. We went to what was the inside track repellent zone. It became a propellant zone. And right now, I've got an internal low, but I haven't got the residual low. It could be higher low. Remember, earthquake, aftershock could be less, the same, or worse than the earthquake. So this is what we're looking at. We've got an internal low waiting to see what happens next. We are still long. We're still actually a little bit aggressively long because we've got the 3 times long position. Did not take a short position because there were so many mixed signals. Now let me go to the mixed signals. Now I can go to, let me just do this over. The Dow right now is up 147. A very nice move to the upside, considering, let me just do this, that it's right at this testing area, this key support level. And it's not a big deal when you look at the chart. It just is sideways action, really. But the weekly chart is very strong. All the technicals are strong in the weekly and the monthly. Let's go to the S&P, do it just purely technically. 9-period moving out over the 14, still very positive. An up move today, up 9, almost 10 at 58.42. Good action, but not great action, just good action. MACD's weak. Relative strength is weaker than it was, but okay. The stochastic is weak at 60%. On balance volume, the blue line right there is not overbought. It's doing quite well. Okay. But look at the weekly chart. I've got a peak C, and it says it should go to a D. And incidentally, I've got this as a brand new buy. I went to peak C1, C2, a brand new buy signal, going to a buy mode, peak A, peak B, C, D, D. The 4th highest peak is where other things can happen, and that's what we have there. And Fibonacci-wise, into the 76% support level, and it's rallied some. Looking at the weekly chart, the MACD is good. The stochastic's fabulous at 96%. On balance volume is good. 9-period over the 14. The price is over the 9, but it's beginning to kind of struggle a little bit. So I'm expecting there's a chance that we could get a pop to 58.78.47 to start a leg D. And then we've got to be careful. Monthly chart could be an instant restart, but I've got it's leg F. Everything here is fabulous. On balance volume, though, is a little bit overbought, just like it is in the weekly chart, but the other technicals are very strong. Q, Q, Q. I renotated this so that and it fits really well. I have no qualms in Chapman wave notation that was a peak D back in end of September, pulls back, starts a brand new buy signal to buy mode, goes peak A, E/B, F/C, and now you've got D and E. And all we need to see is a pop over 503.32. You can extend leg C in the weekly chart, that's fine, but it goes to leg D in the monthly, and that says, okay, now you've got to be a little bit careful and see what happens next. I'll do this real quickly because I don't want to repeat the same thing every day. Tomorrow's Technical Friday, we'll get a little bit more technical. Here's the comp indexes, the broader 200 plus positions or components, and it's gone to a leg E in the daily chart, a leg C in the weekly chart, and a leg E in the monthly chart. I see nothing technically yet to say, oh my God, we're about to crash. I do see, and I said I'm going to talk about the election in terms of the market, and I'll do that in a moment, but let me just go to this briefly. I want to show you the SMHs. Have they come back after the advanced micro devices debacle? Yes, down 4.5 at 252.46. Came back a little bit. It had 253 round number open. It's within the rectangle, and all I can say is that the SMHs are hinting that we could have some kind of a digestive phase in the general market. Haven't got to that level just yet. And one other thing was the XLK, which is the select. Oh, I haven't updated that. I will do that in the break. Basil Chapman, Dow's up 184, S&P's up 10. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, so look at this single leg A up in the 10-minute chart and a really terrific overnight right there, around about 9, 10 o'clock last night, and then it just came down, made an arch formation and pulled back all the way down to the low of 5845.50, and look at this, we're up 30 points from there. This market, and I'll talk about the election aspect as it relates to the market and what the market's doing. So when the market perceives, and we've seen this over the decades, when the market starts to perceive that it thinks it knows which way the election is going to go, and remember, it's a cumulative response. In other words, it isn't one person saying anything. It's the cumulative action of the doubts. The market itself is just a price point at a certain moment of collective thinking. And you can see in this particular instance that the market was working its way down pretty seriously, and all of a sudden it's starting to rally. This is a 5-minute chart. It went right through the 200-period moving average, as in the 5-minute chart, as well as the 58.74 moving average in the E-mini, the 10-minute chart. And it's walking the 9-period moving average in the 1-minute chart. And that's just saying majority of people right now are buying, right? Now, when you look at the general market, and what I'm going to do is I wanted to show you guys the XLK. So the XLK has already made a peak D 4 months ago. 4 months ago, it made a leg D, and then 3 months ago, it made a peak. The S&P Select Tech Spider Fund. And then you went to a peak C in the weekly chart, pull back sharply. And that's one of the few times I can't really give any other explanation than to say that that was a failure, an all-time high. I can tell you I've done, I can't say hundreds, I'd say thousands, maybe tens of thousands of charts over the decades where you've gone to heights, and invariably it will not be a C. It'll be either a D, E, or F, or even a G. But under it, look what happened. You've got a gray A B, C, the MACD crossed positive, stochastic went over 80%. So now it's a formal, you can go to an up arrow right here. And that means that the S&P Select Tech Spider Fund, the XLK, is in a leg C. And all it has to do is go 1 penny above the high that was made 3 weeks ago of 234.57 at 234.38. It makes leg D. That negates that C minus. That becomes a new thing, and then we've got to watch what happens. So I want you to go through that. I want you to also look at something else here. So I'm going to go through this quickly. Gold is at an all-time high, doing very nicely. The monthly chart is only at C. It suggests that there should be a leg D probably in 2024, even though they're just a couple of months to go. But we'll have one pullback maybe all of November. Who knows? You don't make a new high, and then December you do, or we make peak C and we don't make a new high until 2025. But in the Chapman methodology, a buy signal upgraded to a buy mode, no matter what the time frame, invariably goes to a D, except this one case we saw the weekly chart of the XLK went to a C minus because it failed. Okay, within that context, what we're looking at here is gold is doing fantastic. You look at the gold, the GDX, peak D, if it doesn't make a new recovery high by Friday afternoon at 4 o'clock, in the weekly chart, the monthly chart's a leg D, and the daily chart's a G/C in the 44.10 area, and here it is at 41.30. It's really struggling. All I can say is that gold stocks, and we have a gold stock, it's done nicely, but it hasn't really followed the way gold has been. The gold stocks are not all participating as well. Remember, AEM was one of the best, and it's done very nicely. It's closer to the gold chart outlook. It made this beautiful cup formation in the monthly chart, left side, right side price time match. It is 1 month late getting to 89.23. Invariably, when that happens, it actually supersedes, it goes over that particular level and then comes back under it. So Agnico Eagle, beautiful Chapman wave price time match in the monthly chart. But if you go to Newmont Mining, look at this. What a smash from 58.72 down to 47.05. Peak E in the daily, peak D in the weekly, and only a leg B in the monthly. So they're all doing different things. All right. With that said, let's go to silver. Silver's actually had in some ways, it's a better chart. Certainly, maybe not just to the gold contract, but to almost everything else that's related to those metals. And it's trying to go to that leg D. It's at 33.95, down 48 cents. It just seems a little bit better chart, and I think it's still acting very well. Let's go to high-grade copper. High-grade copper is pulling back. Today it's up. It's unchanged at 4.36, just going nowhere. And that's kind of a signal to be a little careful out there in terms of the overall picture for the world markets. And now let's go to, so you remember we were looking at this chart right here, AEM. See this cup formation? Beautiful cup formation in the monthly chart. Well, have a look at this. I had a question from Greg. Morning, Basil. Would you look at PLTR for me? I have a small core at 21.74. That's more than doubled. And have taken profits along the way. I have the monthly leg E. Yep. And it has hit the round number all-time high of 45. Oh, wow. You did everything. You did all your homework. Remember, I was talking about this yesterday when I was interviewed by Jacob. 45 round number all-time high back in January 2021 after the fourth month of being an IPO, and then plummets down to 527, comes all the way back, ninefold rally. It goes to 40. It goes to 45. I think it was 11 or something. 45.14, and now it's just stalling a little bit. So let me finish this thing. I've put a stop at 40.36 on half of the position with the idea that I would add back on a pullback. The report on 11/4/24, what do you think? I can't call in tomorrow. That was yesterday, so that today's tomorrow. but we'll listen on the playback. Thanks, Greg. So, Greg, I think you've done everything right. I don't want to mess around because you're the one that got in fantastically. I am going to say to you that this particular pattern going to an all-time high in a monthly chart in this huge cup formation with a beautiful left side, right side price time match says that Palantir should go much higher over a period of months. That's the way the chart is looking. But I agree that if it starts to close under 40, what did you say, 40.36? If it closes under 40, then I think there's a timeout that could take price and time rather than just time. Number one. Number two, Palantir Technologies develops data fusion platforms. It's in really important areas. I think this is in play to the extent that it's going to, even if it has a big pullback, it's going to find buyers and it's going to make probably higher lows and higher highs, at least for a couple of months. That's what I'm looking at. So I agree with you. Let's look at it again. You've done all your homework. All I would say is that if it starts to trade above 46.50, in other words, gets into the mid-40s, it could actually go a little longer to the upside, but you are in the core position. So I'm not going to say anything about you. Congratulations, you've done your homework. You've done it well. I'll be right.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foresight Fund Services, LLC.
Hi, folks. So, yeah, good comment from Eyeballs in the Den. When Cat opened at a round number low, so the low this morning, let me just show you this here, is 367. It opened at 374 round number. Then it went lower. It went down all another 7 points to 367, 367.20. And now it's trading at 378.69. And you mentioned that it's got the round number. It might make a Roman candle, Chapman wave Roman candle, but that'll only happen. Let's just say that this is an hour into the trading day, just over an hour. So you would have to see, well, first of all, if it goes to higher highs, the longer the body of the candle, the less it's going to look like a Roman candle. The Roman candle, Chapman wave Roman candle, I wonder if I can see any right here in this particular. Not really. No. Pity. Not either green or red. I see an upside down one. Okay. So for this to be a Roman candle, the wick is usually very long, much longer than the body itself. If the body is much longer, so in other words, what I like to see for a Roman candle is that either if it's from the bottom to the top, the long wick, the shadow is long, and then the body is shorter. The body needs to be half to 3/4 to a quarter, I would say, or a third of the entire wick up and down. So in this case, it'll be a little bit, it's got the kind of characteristic a little bit, but the day's young. Let's see where it closes. It would have to close as it stands right now at 380, somewhere at the 380 area. And then I could say, yeah. And then the rule would be if within 2 days it starts to trade for 60 minutes or more below the halfway marker of the long wick at the bottom, that would be 372. There's a real good chance it'll test this candle's low. So it isn't quite the Roman candle, but good eye. It's very close, and even the weekly chart was very close, but it isn't quite the pattern that I look at. I could find a couple. Let me find one right now. Let me go here. Chapman wave. Yeah, I typed it in. Yeah, there it is. You see this red candle right here? I typed in Chapman wave red Roman candle, and then the price went below halfway of the wick. It's this candle. Yeah, let me expand it so that you can see what it looks like. This happens to be a red body candle. So the principle is the same. It's just that if they're green, it means one thing, and red, it means something else. But the candle itself, the actual methodology, there it is. I'd said that this one was too big a body to have a Roman candle, but this one right here, the candle in the Dow of the 24th of October, there. And if the rule was, if it starts to trade for 60, well, I had actually said 45 minutes or more below the wick midpoint, then there's a chance it'll test or even take out the left side low. That's exactly what it did. Okay, that was a good question, and I'm just trying to explain the precise answer. Okay, so with that said, I want you to do, wow, did I lose my train of thought? No, I didn't. So I've written down a bunch of things here. So let's just go to the SMH. The SMH is the VanEck Semiconductor ETF. Down 4.5 at 252.39. This is what's telling me that I have to follow the rule of my semiconductors over the decades that says the semiconductors are the crude oil of the 21st century. Just as crude oil in the 1900s, late 1800s, then the 1900s, and then in the 2000s became such an important ingredient to everything in our economic world. So the semiconductor chips, which actually also use oil, semiconductor chips are really important. So when the semis stall, I always look to say, is the market going to copy? Is it when the semiconductors lead to the upside, I say, gee, the market should follow. When the semis lead to the downside, I say, expect some choppiness. Well, they went to 144.32, all-time high, That was on the let me just check the date, 22nd. And now they've just kind of stalled. They haven't done anything, but they're at the highs, close to the highs. Leg E in the monthly chart, leg E/C in the weekly chart. There's still a little residual room, the technicals being strong for it to have one more bounce. We'll see if that's going to take place. And the other thing that's really important about them is that you always have this mixed market. Look at this. Intel gets the billions and billions. How Intel was the one, maybe because it's a U.S., the fab would be U.S., whatever it is. I'm not sure why, but the chart itself says when the semiconductors have done so fantastically, Intel has done everything wrong. I mean, Intel looks like GE used to look when they bought everything wrong at the wrong time, etc. But they got that big chunk of money. So that's important. But even then, it's just stuck at in the 22s. It hasn't really gone very far. It should be screaming up in the 40s, and it's not. So that's that. And then NVIDIA, the leader, is way up there, off its high. Oh, did I mix things up? Yeah, NVIDIA is the one that went to 144.32 all-time high, above the 140.76 in a V-shaped pattern, but the technicals are still strong. Let me just go back just to see that I clarify. SMHs went to 262, but 283.07 was the July high. They just stuck in the sideways move towards the higher level at 252 right now, 30 points away from the all-time high, 12% or so. But they're not breaking to the upside. And that's the reason why I'm saying this is a rotational market. You just got to be careful. You got to be very select, and that's very important. Talking about the select, look at the XLF. This is the S&P Select Financial Spider Fund. Leg D in the monthly chart, all-time high. Peak E for 2 weeks now, with a high in the 47.70s, I think it was. Let me just double check. 47.81. 47.81, right, 47.81. Holding very nicely. Good day today, up 39 cents at 47.30. And it seems to me that you've got a really good potential for a cup formation. One of the reasons why I had no intention of going short just yet, I needed much more evidence to say there was an opportunity to go short, is that the 914s, except for the Dow, the 914s of the key indices are still very strong. And that just says to me, have patience. So here we are, 47.82. We'll start leg D. And that'll be a new leg up in the weekly chart and continue leg D in the monthly chart. It's so important. But look what's happened here for the KRE. KRE is the regionals. Regionals are up $1.14 today, 60.34. They have made that leg D in the daily and the leg D, missing leg D in the weekly. I'll be right back. Dow's up 181.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn. and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Our votes were back. Dow's up 154, S&P's up 12, and yeah, in the Tiger YouTube, I absolutely concur. I mean, it's just really tough to think that we've lost our Tom O'Brien. Brings tears to my eyes every time I think about it. All right, we're looking at the KRE, which is the S&P Regional Banking ETF, finally participating well, making higher highs, higher lows. It's in the inside track repellent zone, but so far the technicals are really concurring, except for the stochastic and the daily, which is at 71%. It should be higher. The other technicals are good. Relative strength is actually kind of lagging right there. Weekly charts, though, have really improved a lot. And funnily enough, the monthly. Now, I have the monthly with the left side, right side price time match going to, I think it's either, let me just double check here. Yeah. That's going to, I think it's either December or January, going to December or January, and that would target the left side high of February of 2023, and that's a 65.32. 65.32, that's a long way, but we'll have 2 months in which to 2 months in which to do it. But that's kind of what I'm looking at as a potential. Major support now is in the 58. It's at 60.16 right now, up 96. Major support is in this whole area between 58 and just to break under the most recent low, make it 56. So that 2-point cushion should hold on any sudden pullback. So here's a couple of things. So should I do it now? I've got very limited time because there's this and then there's a break. So I keep writing down every day the round numbers and all the sorts of things that I'm looking at here. So let's just do this. Microsoft's got earnings report. So for my subscribers, when there's an earnings report, and I think it's going to impact us in negatively or positively, I'll put it in and say today's, I've been talking about it on the show, but I didn't in my newsletter. I actually forgot to put it in today to say, so afternoon, Microsoft comes out with earnings. But when we're in at 338, it's 100 points higher right now at 43. We hit 438 today. It's trading at 437.70. I don't really care if it pulls back 15 or 20 points. I'd care if it pulls back and it cannot hold the 425 to 420 level and then starts to take out 411, the 200 period moving average, in the next week and a half going into early November, because that kind of speed says, then that rally is kind of negated. But as a long-term position, just a kind of a buy and hold, we've already had trading positions and all that, I'm fine. If it actually gaps up and goes to a leg C, even if it doesn't hold, but it gaps up on a print basis tomorrow and can go over the high that was made at 441.85. It can go to 441.86 to start a gray, still a gray leg C in the weekly chart. Then maybe the MACD will actually cross positive in the weekly chart. That would give it legs for at least another week or two on the upside. And that would be great. And I didn't want to, right here when it hit that 200 period moving average exactly on the 7th or 8th, what was the date? It was on the 8th. It went to 408.17. The very next day I was going to say, you know what? Let's have a trading position, because very often that becomes a springboard. It did before, back in September when it hit that same 200 period moving average. It ran up all the way to the 440 level. So, but I didn't, because we're in other things. I just wanted to spread that money in a way that said we still have cash if there is a sudden sell-off at any point. Now, just back to what the market's saying. The market's saying it's thinking that it knows and is comfortable at this particular point with its selection of what it perceives or who it perceives as the winner for the presidential election. We don't know that. And one of the things that this particular chart here is saying, was it this one or that one? It was this one. One of the things that this particular chart is saying, that yes, you might have, it wasn't this chart, it was that chart. Okay, let's go to this one right here. What this chart is saying is that, yeah, you could have the 11th of November as a matching time sequence, but that's a long way to go. You're at 42,377, and that would say you'd have to go to the 43,326, I believe it is. Yeah, 43,325.10, 1 penny higher, and that gets you to a higher high. Then that could take you to the time sequence, and that's all it says. It's a time sequence. It's somewhere around about the 11th is where it should top out. I'm treating that as background noise, but what it does say, if that's the case, we might have to wait for a little while before we actually know, unless it's absolutely clear come Tuesday evening, Wednesday morning, that no matter what happens next, there is a majority of votes that gives one person a strong lead. And the market is only saying right now, this is what we're thinking. And that could change on a dime. Not a dime, on a dollar. Okay? So that's the point that we're looking at right now. And I've seen this happen. I've seen this happen very often. We saw that happen back in 2016, where overnight, was it 2016? Yes, where the market was down huge, and then by the end of the day, it just had screamed to the upside. So all I can say is at this particular point, that's what the market's saying. I'm always a little skeptical about market decisions because that can change, as I say, on a dime. So Microsoft is key because it's helping. Look, it's up 5 at 436.90. Not a big deal, but it is helping the Dow somewhat. We're looking at Caterpillar's hurting the Dow, and this is helping. And this bifurcation is really important, what we're looking at right now. Okay, so now I want you to do this. Instant restart question in about an instant restart. It feels like every day we're walking on this ice with the roadway, taking the market down. Do you see an instant restart as possible? Should we be frightened? So Kevin, I'm going to answer that in a moment, but I think what our strategy has been, I have no qualms at this particular point with the strategy, and I'll go through it when we return. We've got good stocks, and that's really the most important thing.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, so let me just do this real quickly, but I'll spend a lot more time tomorrow and Friday is what we call Technical Friday with Chapman methodology. I get more into it. You see this leg A in the weekly chart, single leg A to the upside, and you see this lowercase h that goes to a lowercase m in the monthly chart. I have to talk about that and spend a little time, but here you've got a peak F with a doji candle high, 2 dojis actually, silent doji and a regular doji right there, and today there's a red candle. Dow's down 19 ticks at 104.08. What I'm looking at here is that the strength of the dollar, and it's got a 9-period moving average. I got to wait for Friday at 4 o'clock. So far, it's crossed L. That means it's the 9's crossed over the 14 after a severe decline. So it's really important because if you put this together, EUR/USD, look at the exact opposite with a little bit of a bounce now in the euro trying to rally. off. Here's a fib number, but that's not the point. Point is it's trying to get to the 1.08 area where the 200-period moving average is. Look at the USD JPY. It's the exact opposite. You've gone to a 3 doji candles G, but all the technicals, like the dollar, are still very strong. So I need to talk about it, and I'll talk about levels rather than say, what's going to happen? I'll tell you what will happen if certain levels are taken out. That's the best way to do it. So with that said, let me just look at the market and say, this is what I'm anticipating. If by the end of the day, Dow's now up 140, it's given back a little bit, it's struggling for that 9 period to get above that 9 period. It needs to get to the 42,500s to start showing some strength. But you see the rotation, all of a sudden the IWM, well, it's given back a little bit. But look at that nice candle, gray leg A, gray leg B, in the week, in the daily, and it really looks like it really wants over the next 2-3 weeks to break into the 230s. It hasn't done it. It can spend more time in this rectangle formation. So there's a lot going on, and it's this rotational upper correction where as you get to highs, so something takes a breather, like Microsoft was messing around, didn't do anything, and all of a sudden it starts to lead. Maybe today it changes course again.